Hi guys, I hope you are having a good day. So today I'm going to discuss about my latest and recent startup which I've started up like in past 4 to 5 months. So instead of going for a particular internship or a job, I decided to take a risk and go ahead with my idea. So basically what we are doing is we are basically building algorithms for the stock market, and we are basically a B2B startup, but we will be going towards like B2B2C or a B2C retail arm in the further future. So talking about basically how I have gone through this for the past 4 to 5 months. So basically, so just to brief about my career, so I am doing my bachelor's of in computer science engineering from Bennett University Times Group, which is situated in Greater Noida. So basically, Bennett Hatchery, which is the basically a part of the Bennett University itself. So it has helped in incubated my startup, and they have guided me and mentored me throughout. So basically, my mentor Manish Mathur has helped me a lot, in getting the reach to the different contacts, and how to focus on different marketing styles, and how we can target the audience into the startup, and how we can build the clients throughout this startup. So being said, so Bennett University focuses much more on the research side of it, and we are there are different opportunities that are given by the university. So this, like, doing my own startup was one of those, and I've been very grateful for like university itself, because to get the support throughout. And this is not my first startup. I have already yet done another startup in COVID times also. So they also helped me in that. So that was very like so it was not more of a like the money it was not made out of our profits, but to help others. So yeah, that was the different story. So coming to this startup, so which is called as explare. So why I've named it explare, because explare is basically the name sounds like it is more expensive, and it's derives out its value from how we have been witnessing the market trends throughout these years. So like, coming to the our main tagline, so basically we are claiming ourselves as recession proof, that we are recession proof. Now why I'm saying this, because when I started this business, this chain of like doing the building algorithms, so many of many people were getting fired from their companies, and a recession was loomed over the like worldwide. So there was like recession going on worldwide. So we thought of, why can't we build a model or a business around it, so that which can sustain these. So recession is caused by human itself, right? So there are certain factors, but in most of the cases it is caused by human nature itself, and humans are responsible for that, right? So how can we create a company or build a business around it, that it is not much like it is not impacted by the recession, also how it can be sustained throughout those tough times. So it was our in mind when we started to build this startup. And so basically what we are doing, so basically we are using data driven approach to identify profitable investment opportunities in stock market. And for that we are using the models such as strategical arbitrage. We are also indulged in doing algorithmic trading, and we are using machine learning to analyze the market trends and build the AI based portfolios out of that. So basically we are also in building the portfolio building service to create diversified and risk adjusted portfolios to our clients. So yeah, this is the whole approach for how we are going towards. We have taken towards the startup. Now here is the segmentation according to the recent market value of our startup. So basically, according to May 2023. So as you can see, the cryptocurrencies have the highest amount of risk and lowest amount of reward because of their volatility in nature. Right. Same goes for bonds and mutual funds, because we have limited amount of risk and limited amount of reward for that. We have derivatives in our hand, which is much more predictable, and they are the main driving force of a startup, because they have the higher risk and higher amount of reward. So as we are young, and we are building those models around these derivatives only, and how to tackle these scenarios in real markets. So that's how we are, focusing on building around that, so we can get the maximum out of those things, like those derivatives, and we can make profits for our clients and businesses. And the fourth thing is equities, which has the highest amount of risk and highest amount of reward, but lesser than derivatives, right? So yeah, so our offerings is basically building algorithmic strategies for clients and businesses itself, and building rebalanced portfolios for them. And third one is, which is the far-fetched idea. We have not started implementing it yet, but it is client-based monetary lending. So we will be focusing on providing liquidity to markets as well as retail people, right? So it will be thoroughly based on performance, and more details will be released on our website soon. So as of now, we are building algorithmic strategies, which are basically machine learning models for the market index currencies and rebalanced portfolios curated by specifically artificial intelligence to uh, tackle the market risk. So skills and technology used for building these portfolios and these models, basically Python and R are the programming language that we have used. So I have also done CFA program, investment foundations program, basically. And here is, you can see, have a look at our basically the portfolio which I have built. So you can see we have taken those companies which are stable in bear market. So, and we have allocated these weights according to the artificial intelligence that has given us that what amount of weightage should be given to these particular companies, so that your risk is minimized and returns are stable in the bear markets, right? So you can have a look at that, and this is our free portfolio for our clients. So basically, it has been given to the people so that they can have a look and just play around with that. And second thing, so according to our model, which is our, so we have two models, machine learning models. So our first, so we can't show you the direct code because of the privacy issues, but we can tell you about our underlying. So what we are doing is, as you can see, there's a chart of Nifty, which is our national index, and it is a chart of Nifty volatility index. So basically, it is the India VIX, right? As you can see, when the COVID virus came, so it shot up and market started falling. So this was an inflection point where the VIX has to return to its mean value. So it was the best time to invest in markets when the VIX started returning to its mean. So you can see that it shot up like just a line, and then it slowly came down. So you can see we slowly started climbing up, and we have particular instances where we can directly invest in stock market at particular points. So basically, we have a dip here, we can buy right here. We have a dip here again, we can buy right there. So that's how the strategies work. So we find out inflection point and predict the markets that where it is going to go in like next 6 to 7 months. But to be shorter, to be precise, we predict it for 3 to 4 months, right? Now coming back to the our presentation. So I have done CFA IFP program, which is based on portfolio construction and risk management. So I will also be giving my CFA level 1 in November, which increases my credibility as doing this startup. It requires a lot of credibility around it, because no one is going to give you your money, and you have to have licenses around that, right? So that's the whole scenario of putting it out. And basically, we are using Analyzer, TensorFlow, and Spider for our models itself. So these are our latest predictions that our model has predicted. So right now, Nifty, which is our index, national index, is at 18,100, and we have a high probability that due to low VIX, which has increased our accuracy because we can see the levels of 15,500, 15,800 levels that can be witnessed in next 3 months. So it is not the right time to invest in markets. Now many people can say that Nifty will have a bull run and we are now safe, and we are coming out of recession, and the company's results are good. But that's not how the markets work, right? The VIX has to revert to its mean value, and to revert to its mean value, the market will come down like in next 3 to 4 months. So that's how our model has predicted it. It's 87% accurate, and we are not revealing out too much about how our model works, but that's for the rest of it. Secondly, we have our secondary model, which is also built portfolio with customized allocation of assets based on market volatility and risk averse factors. So this is our competitor approach. If so, we are not the first ones in the market, but this is a competitor approach which gives us the upper hand. So basically, we have no markup fees till 1 lakh rupees, and we are using QA statistical modeling, which is quantitative analytics statistical modeling. So basically, we are using machine learning models to crunch the numbers and build decisions on that. And secondly, we are following the unidirectional approach, which is a short only markets. So basically, we are providing you the hedge against bear markets. So that's how our models and portfolios are built around that, right? So this is the piece of advice that was given by my mentor through LinkedIn. So which is given by Guan Zentan, which is the like the manager at Point Hope Group. So he told me that the best way to make profits in market is by making the markets itself. So what it means is like, in order to make profits, so you should provide liquidity to market. You can't be, be wealthy by just investing around 1 lakh or 1 crore rupees. You have to, control the markets, and to control those markets you have to have liquidity. So that's how his advices stick to me, and that's why I have mentioned it in this slide itself. And these are our partner in talks. Basically, Kotak Neo is in for, the providing platform to test out the strategies. And Futures First is also there, so they are only restricted to futures, like doing derivatives in futures itself. But they told us to like test out the strategies and our strategies from themselves, and then we are having a mutual relationship that how we can generate the model around that. So that's the second thing. And third thing is Marcellus. So basically, Marcellus is the investment fund in India. It is a very renowned investment fund. So we are in talk with them. So they have their AI platform, which they want us to like build the models for them. So basically, that's our B2B partnership with them. So basically, yeah. So as soon as this like the licensing and the portfolio construction is done, we can have like we can build a model for them, and they can just give it to their clients, right? So that's the whole sum up of our what we are doing at explare and how we are going through it. So you can just scan this code and have much more look and get much more insights about how what we are doing and how you can also be a part of it. So yeah, thanks, and have a prosperous investment journey. So being said this, so basically this is so you have to be very careful about how you have to deal with the markets. And so this is not the our advice, all these advices. So we have the licenses of advising itself, but it is subject to market risk, right? So you have to be very careful. And I would like to thank Bennett University and Bennett Hatchery and Manish sir itself to that they have supported me a lot, and our dean, which is of CSE department, who is Deepak Garg. So thanks a lot, sir. And yeah, I hope we make a cracking in this market, and we prosper ahead a lot. Thank you.